Welcome to All That Matters, a conversation show about markets, investing, and wealth management. My name is Mike Antonelli, market strategist at Baird. Joining me as always, Ross Mayfield, investment strategy analyst at Baird. Ross, this is our second episode, our first episode, my friend, a smash hit, racking up thousands of views on Baird's YouTube channel. How do you feel about that?
Well, I feel great about it, but I can promise you, we're not going to let it go to our heads. We're going to stay very humble about this.
We're so glad you guys enjoyed the first episode. Again, our goal for these is just to talk through some questions that are on our mind in real kind of simple to easy to understand ways. Try to do it in another 10 minutes. We got 3 questions for you today. Number 1, is a recession imminent? Number 2, what's up with regional banks? Why are regional banks in the news so much? And number 3, if you are worried about a recession, what should you do about it? So let's kick this off with the first question, which is a recession imminent? Ross, really quickly, there's an entity called the NBER. They determine whether we're in a recession or not. I'm going to give you 6 characteristics of a recession that they look at. 2 of the characteristics are just jobs. Do people have jobs? What is the employment situation? The next one is, are people buying things? Real consumption, so kind of adjusted for inflation. Industrial production, is our nation making things? Real personal income, so what is the after inflation effects of people's income? And then the last one is real manufacturing sales. So are we selling things, manufacturing items? So Ross, what do you think? Is a recession imminent?
No, I don't think so. At least I don't think we're going to wake up tomorrow and find ourselves in a recession. And we've been talking about a recession for 16, 18, 20 months because as the Fed raises interest rates, that typically leads us into a recession. But the economy has been so resilient. The labor market has been so resilient. And even to the most recent jobs report has been actually incredibly strong that it's hard to see a world where we wake up next month or in a couple of months and see a recession. Could one be on the horizon? Absolutely. These things happen all the time with consistency. But is one imminent? I'm going to say no. What do you think?
Remember I mentioned 2 of the 6 were jobs. And I just want to real quickly jump back to the jobs report that just came out. You may not know this, but the prime age population in the United States is 25 to 54. Okay, we call that the prime age. How many of those people have full-time jobs? I think that's a really important question, right, Ross? How many of our prime age workers have full-time jobs, not part-time? That number that just came out is at its highest level since 2001. So, Ross, sometimes I'll hear that people say, oh, everybody just has part-time jobs or the jobs nobody wants to work. That is not in the data at all. At all. Highest level in 2 decades of prime age people working. So jobs are doing well. The housing market's doing well. People's homes are actually hanging in there in terms of price. Maybe the West Coast is a little more constrained than the rest of the country, but homes, people are still buying things. Those consumption numbers are still strong. Like you said, Ross, the main concern of why people think a recession is imminent is because what this entity that hiked rates and really tried to fight inflation. And there's never been an inflation fight that didn't end up in a recession. I'm with Ross. I just don't think one's imminent. We are willing to change our minds. If the housing market slows, if something happens, if like an out of blue event happens, we're willing to change our minds. But Ross, the job situation, the housing situation, auto sales are picking up. That just doesn't strike me as a recession right now.
No, I mean, you can use a pretty easy, roadmap for our economy. We're a consumer-based economy, people spending on services and goods. And if people have jobs, they feel good about spending. If their home value hasn't plummeted, they feel good about spending. Neither of those things have happened, and people are out and spending. You can go pretty much anywhere and see a lot of people willing to fork over money for goods or services. So, it's pretty simple that way. Now, the regional banking crisis you mentioned is something that could twist things a little bit. So what do you think about that? Could that be kind of a catalyst for this sort of thing?
Sure, yeah. The regional bank thing, which we're going to talk about in 1 second, is probably the one thing that's on my radar where I'm like, oh, if a bunch of regional banks stop lending, that kind of reduces the economic activity in the nation. Before we get to that, let me just wrap up with one final thought. The Atlanta Fed, which is one of the regional Feds, has a model called GDP Now, where they try to predict what GDP is going to be. In the first quarter of this year, my friends, it was a little over 1%, so that's positive. And in the second quarter, the one we're in now, they think it's going to be 2.7. That model changes over time. But as we wrap this section, even their model doesn't say we're in a recession. It's just, is one imminent? I don't think so. Again, we're willing to change our minds, and hopefully we will if something happens. So let's move on to regional banks, Ross. The number 2 question, what's going on with regional banks? Why are they in the news so much? We have to kind of center ourselves as to what it is that banks do, how they make money. Right? They take in deposits, they make loans, right? That's as simple as we can make it. When that entity hikes rates, that Federal Reserve hikes rates we just mentioned, it does tend to reduce the value of some of those long-term loans. Like when you make a loan 10, 15, 20 years out, it reduces those values. A lot of these banks hold like treasury bonds and treasury bills. We know those were bad last year, so some of their assets fell. So if their assets are falling and then depositors are worried about banks and they say, I don't want to make 0% on my savings account, I'm going to take it to a money market fund, then deposits leave, then you get that problem, right, Ross? Their assets start to fall and depositors leave, and that's where they're in the news, right?
Yeah, and that's why, people lose confidence and then it can spiral really quickly. And it's really important, especially these regionals, because regional banks are the ones who do the lending to small businesses and smaller communities. And, that's where a lot of the jobs in our country come from. So we're talking about jobs are kind of the key to why a recession isn't imminent. But if regional banks stop lending or tighten their lending and those smaller businesses have a harder time getting credit or they're paying more for the purpose of that, then that can start to spiral a little bit. So it really is all about confidence. And, things seem like they're shoring up right now, but this, like you said, would be the major thing on my radar, because it has been percolating now for really 2 months at this point.
And how will this end, I guess, is a question we should kick around. How will this regional banking crisis, if you want to call it a crisis, end? Well, I like to remind you that every now and then the market does this. Every now and then the market just kind of taps on a sector and says, hey, are you guys okay in there? What's happening in there? And it tends to tap on the banking sector a lot, because you could go back to the 1600s and you'll see a banking crisis all the way back for hundreds of years. It's just trying to say to the sector, what's going on? Rates have gone up a lot. Your depositors are looking for maybe a little bit more yield somewhere. Are you guys okay? And it's what it does. And how will this end? You probably need policymakers to come out and say, all right, we're guaranteeing deposits up to some new amount. It's $250 right now for the FDIC. That's the law. Policymakers, not the Fed, would have to change that. They'd have to hike that to some higher amount, and that would give confidence back to people. Say, my deposits are completely fine. I'm not worried about losing above that 250. I think that's my view as to how this ends. But Ross, this regional bank, not regional banking crisis happen a lot, right?
Yeah, they happen all the time. I mean, every time the Fed raises rates, there's a saying that, the Fed raises until they break something. And a lot of the times it's a big bank or it's a banking sector. 1984, Continental Illinois, there's history is littered with examples of this, and they're not good, but we've been through them time and again. And I think the important thing, as you mentioned, is policymakers learn a little something each time and apply that to the new crisis. So, Silicon Valley Bank, we fixed that over the weekend. That was really timely stuff and really important. So I agree with you, though. It has to come from Washington.
Yeah, the regional banking thing, again, Ross is right. That could actually be something that would change our minds. All of a sudden, lending at the community level or at the regional level really declines. That is something that we would look on our radar and be like, oh, okay, if that's slowing, investments in businesses are doing less, people are doing less, that is something that would preclude a recession. So last question number 3, what should you do if you're worried about a recession? So you've got through this and you're actually still kind of worried about a recession. What should you do, Ross? Give them some knowledge.
Yeah, I'm going to repeat something you told me, which is just survive it, right? You have to survive recessions to participate in the upside of the bull markets and the much longer expansions. And one critical way that, you can do that, whether it's a mild recession or a deep one, is have cash, have liquidity. Right now you can actually earn something on that cash, but you want to have emergency cash sitting in something right now that's giving you a yield. So that you're not a forced seller of your stocks, so that you're not a forced seller of your home if things do get a little more dire, a little dicey. You just have to survive recessions so that we can participate in the usually much longer expansions, much more upside. And so I think that's great advice, Mike. What do you think?
Well, so my friend Ashby at Money Visuals, he's a great account I follow a lot, and I use some of his stuff when I engage with our clients. He has this great image about what actually drives investment returns, which is really what matters. Ultimately, right? What drives investment returns to get you through good times and bad times? We're going to throw this image on screen right now. You're going to see it. It's a giant teeter-totter. On the left side is a whole bunch of stuff we've been talking about and you might be talking about and the media might be talking about. And on the right side of this teeter-totter, what actually matters are 4 things: time, behavior, savings rate, and asset allocation. Those things over there are what matters that actually drive investment returns. So Ross is right. You have to survive. There's been a recession every decade for your entire life. And there will be a recession every decade for the rest of our lives. You have to survive them to participate in the bull markets and the good economy. So raising cash, having liquidity available is a great way to survive. Cash, my friend Morgan House said, cash is the oxygen of freedom. And that is true. You don't want to get into a bad situation where you're forced to sell something, which is why we do planning, right? Ross, that's what we do, right? We plan.
Yeah. What do we say? These happen every 6 to 8 years with pretty much consistency. So when you sit down with your advisor and build a plan, you're not building a plan thinking that from here on out, there's no recessions ever again. There's no bear markets ever again. This is built into this is in the recipe. This is in the cake. This is part of the deal. your plan is built to survive it. And so, yeah, we get through it and we get on to the next big bull market.
That's right. The United States of America has experienced 34 recessions since the Civil War. 34. That's a lot, right? There's lots of bank failures. There's lots of recessions. There's lots of things that happen in the world. The world is cyclical. Remember, Ross, I like to tell this to people, you have to have recessions. You have to. If you didn't, the economy and the market would just go straight up and it would get so fragile because you'd have people doing incredibly stupid things with money. And it would get so fragile that you would eventually have a crash. So markets have to pull back. Economies have to pull back. Life is very cyclical. Ross, 2 episodes in the can. This might be one of the favorite things I've done in my career. So I'm so excited to get to the next episode. Any parting words?
We'll see you in episode 3.
Yeah, I love it. We'll see you guys in episode 3.